Buckle up, financial enthusiasts. Today, we're diving into the recent banking sector crisis, focusing on the collapse of Silicon Valley Bank and the domino effect it had on the industry. The sudden downfall of Silicon Valley Bank sent shockwaves across the banking industry, raising questions about the stability of the banking system as a whole. It was a stark reminder of the challenges faced by institutions holding depreciating assets. In the fast-paced world of finance, a combination of economic slowdown, rising interest rates, and bond market volatility can quickly turn a healthy bank into a sinking ship. Despite initial fears and comparisons to the 2007 to 2008 financial crisis, analysts believe the impact is currently contained to Silicon Valley Bank due to its industry-specific exposure. However, the situation underscores the risks posed by changing economic conditions and asset devaluation, which could potentially affect other institutions with similar vulnerabilities. But it's not all doom and gloom. The government has stepped in, initiating reviews and interventions to address the crisis. Among these measures are deposit guarantees and funding programs designed to bolster public confidence and stabilize the banking sector. The crisis has also caught the attention of lawmakers, who are calling for stricter regulations and accountability for the bank's executives. Federal regulators are set to testify before Congress, sparking a crucial dialogue about the health and future of the banking sector. Despite the turbulence, the stock market ended the week with gains, driven in part by the Federal Reserve signaling a pause in interest rate hikes. But uncertainty still looms over the banking crisis and its impact on the Fed's plans. The banking sector is on a roller coaster ride, and we're all on it, but don't worry, we're here to break it all down for you. Now, let's switch gears and talk about the regional banks. They might be the underdogs in this story, but they're showing resilience in the face of adversity. In the aftermath of the Silicon Valley Bank collapse, regional banks found themselves in a tough spot. They faced severe devaluation and a lack of investor interest. Yet amidst this turmoil, there were some glimmers of hope. The rescue of New York Community Bancorp by former Treasury Secretary Steve Mnuchin is a case in point. Against all odds, Mnuchin stepped in, highlighting the challenges in the sector, but also the potential for recovery. Even in the face of such adversity, there are regional banks that are standing their ground and even proving to be attractive propositions for long-term investors. Let's take a closer look at 4 such banks: Ameris, Fulton Financial, Old National, and United Bankshares. Despite trading below book value, these banks are paying dividends, signaling a level of stability and commitment to their shareholders. Ameris, for instance, is showing promising financial metrics, maintaining a steady performance despite the challenging market conditions. Similarly, Fulton Financial, Old National, and United Bankshares are holding their own, each with their unique strengths and strategies to navigate the crisis. Their market information and key financial metrics offer insights into their resilience, and for the discerning investor, they represent potential value stocks in the regional banking sector. The story of these regional banks is not just about survival. It's about resilience, adaptability, and the ability to find opportunities even in the toughest of times. They may be the underdogs in the grand scheme of things, but they are proving that they have what it takes to weather the storm. Regional banks may be down, but they're certainly not out. They're providing some interesting opportunities for savvy investors. In the wake of the banking sector crisis, there's been a ripple effect on businesses and startups. Let's take a look at how they're coping and what the future might hold. The collapse of Silicon Valley Bank has sent shockwaves through various industries, with startups and smaller businesses feeling the pinch. An example that stands out is Camp, a New York-based toy company. Following the bank's fall, Camp found itself in a financial bind, illustrating the far-reaching impact of such financial mishaps. Startups like Camp face an uphill battle in the current climate. With rising interest rates and reduced access to capital, their usual avenues for funding have become much more challenging to navigate. The situation underscores the importance of financial resilience and adaptability, particularly for businesses at the start of their journey. However, it's not all doom and gloom. Amidst the chaos, there's a silver lining. The banking sector's resilience is now under the spotlight, and many believe it is more robust than it was during the financial crisis of 2007 to 2008. This belief stems from the sector's response to the recent crisis, with regulatory measures and reforms post-2008 providing a safety net against systemic risks. The situation with Silicon Valley Bank, while unfortunate, serves as a reminder of the risks posed by changing economic conditions and asset devaluation. It's a wake-up call for institutions to assess their vulnerabilities and to ensure they're well prepared for any potential downturns. Looking ahead, the banking sector's recovery will likely be a test of its resilience. For businesses and startups, it's a period of adaptation and innovation. They need to explore new ways to secure funding and drive growth, while also preparing for any potential future shocks. The banking sector crisis has shaken things up, but it's also opened up new opportunities and discussions. As always, the key is to stay informed and adaptable. Before we wrap up, a quick reminder. In a world where the financial landscape is constantly shifting, staying ahead of the curve is crucial. And what better way to do that than by joining our community? Hit the subscribe button now to ensure you never miss out on the latest insights and analyses. From the rise and fall of banks to the hidden gems in regional banking, we've got you covered. So don't just be a bystander in the world of finance, be an active participant. Remember, knowledge is power. So hit that subscribe button and join us next time as we continue to navigate the world of finance together.